This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 20th, 2017. Our time is 8:42 Mountain. Radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a radio show, they are archived on Harold's website, rarecoloreddiamonds.com, streaming for you 24/7. We have a podcast. You can connect with the podcast through Rare Colored Diamonds or go to iTunes and type in The World Financial Report on Radio. Connect with Harold at 1-800-432-1022, the website rarecoloreddiamonds.com. Our featured diamond of the week is a 1.07 carat pear-shaped fancy, vivid, yellow, internally flawless. See it online, featured diamond of the week, rarecoloreddiamonds.com. Another busy week, and we have all the info in our free weekly newsletter. If you would like to receive our newsletter, we'll be happy to send it out to you. You can go through it in minutes, be completely up to date on the week, or spend hours. It's your choice. And one of the top stories, it was 30 years ago, as of the 19th of October, we had the crash of 87. And I remember it quite well. My first radio job was in Salmon Arm, BC, and my second radio job was in Lethbridge, 1220 CJOC. And back then, I didn't have any money in the stock market as a young guy, and was quite thankful for it, as on October 19th, 1987, there was a big meltdown. In fact, the stock market went down 23%. Harold, I know that you were in the investing business back then and remember that day very, very well.
You bet. Actually, I was just starting off in my career at that point here. I owned a commodity brokerage firm, and it was the largest one-day decline in the stock market. As you said, it dropped by 22.6%, or $500 billion. Today, obviously, if that ever happened again, it would be much more substantial. In fact, don't forget, there was in 2008, the market actually dropped from 14,000 to 6,500, but that was over a period of a few weeks. So, during that particular time, the bond market rallied very strong and the gold market held in very strong. And it was really the junk bond market that really was one of the issues with the stock market crashing. But it was the biggest one-day crash. A lot of people are saying that this could easily happen again because interest rates were, at that particular point, were just starting to come lower. In actual fact, in 1982, interest rates were all the way up to 22%. Then they started coming down after that. So let's hope we don't get another one of those. 22% drop in one day was substantial, and that would wipe out a lot of business if that did happen again.
And some people believe that it was the Reagan administration. Ronald Reagan was in power at that point as president, and some people believe that's when the plunge protection team was put in place, Harold.
I believe that was true, and it is still in effect today, even though, the plunge protection team cannot stop a market from free-falling, especially when there's, abnormal amount of selling, which happened obviously at that point. Because don't forget, in the markets, people put stop losses in the market in automatic trades. So once a stop is hit, all of a sudden the market can just free fall. And just because you put a stop into the market, meaning that if a particular stock is trading at $100 and you want to protect yourself at 90, what happens is once that stop hits at 90, the next sale is when you get out. But if the market gaps lower and just absolutely plummets, which I've seen happen many times, you could eventually get out at way lower price than what you actually put your stop in. So in the marketplace, the market could definitely free fall if another situation like that happened because of an abnormal amount of stops in the market that would just propel the market lower and lower. So again, at this particular point, the markets have not been overly volatile, but there's a lot of concern, especially with the U.S. stock market, because it's way too high for the economy that the U.S. has at this point. So right now, again, the markets are going a bit sideways in commodities. Gold, which was up strong at the early part of the week, sold off on Thursday and Friday. As we're taping the show on Friday, gold's down $8.50, so it's trading right now at $12.8220. Silver market's down 7 cents, trading right now at $17.26. The crazy thing is the platinum and palladium market that we pointed out last week. For the first time that I can remember, aside from one instance, palladium is actually trading much higher than platinum is. Platinum, during 1980, when gold hit its high price of $850, platinum was actually the highest priced metal at $1,100. At this particular point, you're looking at palladium is trading at $976 and platinum's trading at $924. Again, an unusual price for the price of palladium over platinum. The oil market is basically trading in a range at this particular point. Crude oil is trading at $51.16, down 11 cents on the day. U.S. dollar has been trading in a range also, but it's starting to inch itself higher. U.S. dollar is trading at 93.64, up 47 points on the day, and the Canadian dollar is down to 1.26. Canadian dollar was as low as 133, then came back to the 123 level, actually made about a 10-cent increase, but over the last month or two, it's drifted back to the 126 level. There's really not an awful lot of news in the marketplace right now that's going to move the commodity markets. There's very little inflation. So gold reacts to inflation, and gold reacts to a strong dollar. If the U.S. dollar was back up at 103, 104, 105 in that area, where I do believe it's going to eventually get back up to, then you would see gold back down, because when the U.S. dollar gets strong, gold actually weakens. So that would be the one situation at this point, aside from if anything happens between North Korea and the U.S. or South Korea and Japan type of thing. So there are definitely situations out there that could move the market. I highly doubt that we're going to see a lot of action out of North Korea. That would be a real stretch to see them actually go to war at this particular point. So there's a lot of talk, there's a lot of rhetoric going on, but I just don't see at this point that North Korea is going to be an issue, at least over the shorter term. So unless something strong happens with the U.S. dollar, which over the longer term I do believe is going to happen, that we are going to see a much stronger U.S. dollar, because all other countries around the world are not doing well. So the U.S. dollar is the reserve currency, and basically we anticipate that the U.S. dollar will get back over par and start to run heavily again. It's just a matter of time.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. We have an auction underway right now at hsfineauctions.com. It's underway online. Go and sign up, take a look at the catalog, and place your bids. Our featured diamond of the week is a 1.07 carat pear-shaped, fancy, vivid, yellow, internally flawless. We will talk about diamonds in the second half of the show, and a lot of diamond news this week. Well, one of my pet issues in the United States and even in Canada is massive debt that governments are in, even in the province of Alberta. We're really digging a hole for ourselves, and we know that's the same federally. The United States, whether it be in states like Illinois, where they haven't paid their bills because they haven't passed a budget. They just finally passed a budget. They're starting to pay their bills, but they owe billions and billions of dollars. Hartford, Connecticut could be going bankrupt. You can look that story up online. But this is something that caught my attention this week, and it's an eye-opener. It would take, in the United States, a 50% hike in income tax, and they're talking about tax cuts now. Remember, what Trump wants to do is lower taxes. A 50% hike in income tax to fund their current deficit. The projected total U.S. debt will be $30 trillion within 10 years. Here we are today at about $21 trillion, and that's using the Congressional Budget Office their own numbers. But the CBO also makes the rosy assumptions that there will be no recessions, which, when you think about it, is absolutely crazy, and that the GDP will grow at a nominal 4%, which is, once again, very, very aggressive. Now, that is possible, but in all likelihood, in both accounts, definitely not going to happen. So you're seeing here a situation where over the next 20 years, the United States could be in debt $30 to $35 trillion, and you have a recession. Maybe they have to print money as they did in the last recession, quantitative easing, adding debt. So you can see a massive amount of debt on the books for the United States of America. And I'll tell you, Harold, it's one thing that people need to be aware of in the future, whether it be the province of Alberta, where we are running big deficits. We have big deficits in Canada now as well with the current administration in place. The United States, if they were to lower taxes, as Trump wants to, the truth of the matter is they wouldn't be bringing in as much money. And they like to say that, oh, don't worry, the economy will take off and then we'll be bringing in more money because of the economy and it'll all be great. Well, the truth is they'll be bringing in less money, which means bigger deficits. You have your debt and then you have your deficits. And the way things are going, if nothing changes, you will have deficits with their budget of $1 trillion, $1.5 trillion, $2 trillion a year going forward. And Harold, that is something that people need to understand is good for hard assets if you're in the hard asset market, because you want to be in things that governments cannot print. They cannot print gold. They cannot print silver. They cannot print diamonds. You want to be in a hard asset that governments cannot print, and that's why we believe in hard assets over the long term.
You bet. You know, the thing is, Randy, is that the country is a business. And obviously, the business isn't being run correctly because of the deficit, obviously. So, fact is, something has got to change. Now, on one hand, if they keep the taxes high, and if business is not booming, then you're only going to bring in X amount of tax dollars. What Trump is thinking is that reduce taxes, which will be good for business, which means more people will be making more money, and the tax situation will straighten itself out, and that does make sense. I mean, obviously, if more people are making more money, but they're paying less taxes, I'm thinking that in the whole, as a country, that they'd be much better off with lower taxes because it's really going to spur the economy. But the fact is that Trump has really gotten nothing done at this particular point. Everything that he's wanted to do has been, basically cut off. So I really don't have a lot of faith at this particular point that he's going to be a very progressive president. Actually, it's extremely disappointing to see the job that he's done so far. And if, as Canadians, you watch U.S. news at all, he's a total embarrassment. Every single time he opens his mouth, something else comes out of it that is negative. So, again, I don't have an awful lot of faith in him as a president at this time. I really don't believe that he's going to do what we thought he was going to be able to do. It's going to be interesting to see what happens with the U.S. going into the next election. I have no idea what's going to happen.
Midterm elections in the United States in a couple of years' time, and then obviously 3 years out, Trump will be up for re-election. It was interesting. There was a story that I found, and we have it in our free weekly newsletter. It turns out it will be Congress's fault if the stock market crashes in the United States. Don't take credit for the stock market. President Trump is often warned, you'll be blamed when it crashes. Well, maybe that can be avoided too. With the help specifically of Congress, Treasury Secretary Steve Mnuchin warned that they must pass tax cuts or be saddled with a correction in equities after the 20% jump since Election Day. His words came a day after Donald Trump tweeted pictures of the Dow Jones Industrial Average crossing 23,000 for the very first time. Connect with Harold. We are in a time right now where the question is, how do you invest today so you can retire tomorrow? That's why we do the radio program. Harold is there for you to speak with at any time. If you'd like to connect with him, call 1-800-432-1022, the website rarecoloreddiamonds.com. On the Canadian news front, and this is something that we have been warning people about for quite some time, the Canadian housing market. And it's interesting to note that a man who was behind the Big Short, where they made billions of dollars shorting the housing market in the United States, his name is Steve Eisman, and he is a fund manager with Neuberger Berman Group. And he said this week that he is very concerned about the Canadian housing market headed for a slump. And the biggest bank that would be exposed, that would be in trouble, CIBC, Canadian Imperial Bank of Commerce. And he says the Canadian housing market is ripe for a pretty severe correction. And he went on to say that, Canada's subprime mortgage market is much smaller than in the United States. Real estate prices in the country have risen more. And he was featured in the book Michael Lewis put together, The Big Short. And he was also in the movie as well, played by, if I remember correctly, Steve Carell. If you have never seen the movie The Big Short and you are interested in the world of finance, I give it a big thumbs up. It is very well done. Now, regulations that Canadian authorities are putting in place will have a negative effect on mortgage volume next year, which will translate into lower prices. And we have that story in our newsletter as well, where what they're going to do is toughen mortgage qualifying rules, and they are going to stress test those that are asking for a mortgage to make sure they could make it through financially if things got tough. So this is what they're talking about, translating into lower prices. In Canada, there's some pretty good evidence that the housing market is finally starting to turn over, Eisman said on Bloomberg Television on Monday. Canada is not going to crash, but it hasn't had a credit cycle in 25 years. I think they're about to have one. Among the country's banks, big banks, CIBC, as I mentioned, is the most exposed. He said he wouldn't call the bank at risk of death and destruction, but of an earnings decline. Canadian real estate markets have recovered slightly after sliding on government moves to curb prices, but Toronto real estate sales are down 36% from a year ago, according to last week's data from the Canadian Real Estate Association. Vancouver's million-dollar home prices aren't just straining buyers, they're holding back investment and business. BC's Finance Minister Carol James, and this is the new NDP government that they have there, said last week, vowing to look at every option on the table to cool the market. And you add into the fact now that Canada's bank regulator is toughening mortgage qualifying rules, and they are going to make sure that they'll be tougher for borrowers taking on uninsured mortgages, adding to a growing list of measures to rein in our housing market, not only in Vancouver and Toronto, but elsewhere. But that stress test is going to come into place for individual Canadians. And Harold, we have about 5 minutes left in our segment here. You can see the housing market in Vancouver and Toronto. As we've talked about before, we had that story from a few weeks ago, UBS coming out and saying Vancouver and Toronto in the top 5 of bubble markets around the world. And Sweden was on that list as well. So this is something that we have to be very aware of and take that into account as we invest in Canada.
You better believe it. Again, but this is something that we've been really talking about for quite a while, and the fact is that you never speculate with your home. Most of their net worth is in their home. So obviously, with what happened in Vancouver and in Toronto is going to be detrimental to other people, because the fact is that the real estate market shouldn't be this volatile, but it is, and it's a problem. And then on top of that, the Canadian government is raising interest rates, which is going to wreak havoc on the market. There's no doubt in my mind that if they continue to raise interest rates in Canada, it's going to be one of the worst decisions that government has ever made, because not only is it going to hurt the real estate market substantially, but on top of that, as we know, individual Canadians have the highest debt level that they've ever had. So raising interest rates only makes that debt more expensive to cover, and makes real estate mortgage prices more expensive. So I thought it was a very stupid thing to do, and I think it's going to prove to be right on that, because it makes absolutely no sense to raise interest rates at a time when there's no inflation in the country. So there was no reason to do it. All it's doing is hurting the individual investor and the individual person that lives in Canada. It's going to end up hurting tremendously. I just don't see the benefit of that.
How do you invest today so you can retire tomorrow? Speak with Harold Siegel. We believe hard assets are a core part of every portfolio, and Harold will be happy to speak to you about them. RareColoredDiamonds.com, the website, 1-800-432-1022, the telephone number, and our featured diamond of the week. We'll talk about diamonds in the second half of the show. Is a 1.07 carat pear-shaped, fancy, vivid, yellow, internally flawless. See it online. Featured diamond of the week, RareColoredDiamonds.com. And on last week's show, we did talk about it, and we can confirm, I guess we already knew for those living in Canada, that Sears Canada did receive court approval to begin liquidation at its stores as the insolvent retailer moves to wind up 65 years of business after failing to adapt to changing consumer tastes. And I guess one of the side effects of them shutting down is if you had a warranty, that warranty is null and void. And I know that I did pick up a washer a little while ago, a dishwasher. They wanted me to buy the warranty, and I said, no. And I'm very thankful now that I did not buy the warranty, because it would have been null and void. So Sears Canada will be winding down. They hope the liquidation will be complete by January 21. About 12,000 people going to lose their jobs, and our hearts go out to those people. Another thing that happened in Alberta, Harold, and I never really talked to you about it, is Chili's. Chili's restaurant, they had, I believe, a different company or CEO take over in the United States, and they cut back their menu by 40%. It was too bloated and big. But one of the things that they did is they're going to shut down all the Chili's restaurants here in Alberta, except at the airports in Edmonton and Calgary. So if you like Chili's the way my mom and I do, you better run and get that chicken enchilada soup we love so much, or else you're going to be driving to the airport. But you can see changing times. And restaurants, not just in Canada, but in the United States as well, restaurants are feeling a major hit as economies change, millennials start to drive things. It's just a changing time that we're in. And that's why we say, how do you invest today so you can retire tomorrow? We believe strongly in hard assets. Connect with Harold at RareColoredDiamonds.com, RareColoredDiamonds.com, 1-800-432-1022. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 20th, 2017. Our time is 9:06 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a show, they're archived on Harold's website, RareColoredDiamonds.com. We have a podcast you can take part of. We're portable. We go anywhere you do. You can be a part of the podcast through RareColoredDiamonds.com or through iTunes and type in the World Financial Report on Radio. This week, our featured diamond is a 1.07 carat pear-shaped, fancy, vivid, yellow, internally flawless. The website, rarecoloreddiamonds.com, our featured diamond of the week, 1.07 carat, pear-shaped, fancy, vivid, yellow, internally flawless. And Harold, tell us a little bit about this yellow diamond. It is a big, beautiful diamond.
You better believe it. Vivid yellow diamonds are the most amazing diamonds as far as yellows go because it's got the highest saturation. And the fact is that every time we show a pear-shaped diamond, Randy gets the biggest smile on his face because he absolutely loves pear-shaped diamonds. But this particular one, on a scale of 1 to 10, the color is a 10. It's absolutely spectacular. It's very, very strong. It's heavily saturated. And the way that the GIA actually grades the color of diamonds is they go from light, very light to fancy. Now, fancy, you're starting to get into the more saturated colors, and fancy is actually another name in yellows for canary diamonds. Then you get into the fancy intense yellows, so the saturation on the diamond is a little bit stronger, and the price goes up more as the saturation gets stronger. So an intense yellow diamond is stronger than a fancy yellow, or obviously any of the ones below it. Very seldom will you see a fancy deep yellow diamond. In fact, I've only seen maybe a handful of fancy deeps, but then you get to the fancy vivid, which this particular diamond is, and you could definitely see, if you were to have 100 yellow diamonds, you would be able to pick this particular diamond out of all 100 diamonds. It's that strong of a color, and again, because of the pear shape, it just brings out the absolute beauty. On top of it, it's internally flawless. So the diamond is an amazing collectible diamond. It will, on a longer-term basis, will be a phenomenal investment, and those are the type of diamonds that I've literally put away for my grandchildren. So, you know, when they were 1, 2, 3 years old, I started giving my grandchildren diamonds, and it was basically the strong yellow diamonds that I put away for the future because the prices are still reasonable, but over the next 10, 20, 30 years, the price of these diamonds can increase substantially. The other thing about owning a diamond is that it holds its equity. It's not like a stock or a commodity that trades every couple seconds and can go up and down in that fashion. You're talking that most diamonds are individual. Most diamonds can never be duplicated in the sense that there's no two diamonds that are exactly the same. So this particular diamond is magnificent. It's a phenomenal investment diamond, and I recommend it very highly as a longer-term investment that will do nothing but go up in value.
Take a look at this featured diamond online, rarecoloreddiamonds.com, featured diamond of the week. Get our free weekly newsletter. In our newsletter, we have from the New York Times, rare necklaces and rings are items to appreciate. Just ask investors. And they talk about how jewelry over the long term, and that includes rings and necklaces and things of that sort, brooches, are doing very, very well at auction. Now, the largest fancy intense pink diamond could fetch $30 million. We should mention that the Argyle pink diamond tender, the cutoff for the pink diamond tender was on October the 11th. We still, and I did check yesterday, we still do not have word on the final results for the pink tender. When we do, we will let you know. But the world's largest known fancy intense pink diamond could sell for up to $30 million at a November auction. It's a 37.30 carat Raja Pink, which was unveiled in London earlier this month. Will headline Sotheby's Magnificent Jewels and Noble Jewels sale in Geneva on November the 15th. And the Geneva sales always are spectacular. They bring out the best of the best diamonds, and they usually have some of the biggest sales when it comes to the amount of money that's being spent on diamonds at those two auctions for Sotheby's and Christie's. Christie's will go the day before or after. Now, the discovery of any pink diamond is exceptional, but the Raja Pink's remarkable size and intensity of color places it in a rarefied company of the most important pink diamonds known in existence. David Bennett, who heads up Sotheby's International Jewelry Division, he said in a news release, pink diamonds are extremely rare, making up less than, now hear this, 0.02%. So 0.02% of the diamonds submitted to the GIA, Gemological Institute of America, each year, according to the auction house. Fancy Intense designates pink diamonds that are quite strong in color. According to the GIA, Fancy Vivid and Fancy Deep diamonds are stronger in color than Fancy Intense diamonds, and they command the highest prices. Now, the Graph Pink Diamond holds the current record for a Fancy Intense pink diamond sold at auction. Once owned by American jeweler Harry Winston, the 24.78 carat stone sold for $46.1 million at Sotheby's in Geneva back in 2010. The record for the most expensive jewel sold at auction is currently held by another pink diamond, aptly named the Pink Star, and the name was changed on that. It was a 59.60 carat Fancy Vivid pink sold for $71.2 million in April. Other highlights from the Magnificent Jewels and Noble sale include two Fancy Intense yellow diamonds weighing 82.47 and 100.254 carats, and a Fancy Vivid blue diamond ring. But Harold, we will be looking forward to in Geneva coming up November the 15th, Sotheby's, and we will find out per carat and how much the Raja Pink will sell for. And we're still waiting here now for the Argyle Pink Diamond tender, the results to be released. We should have them here very, very soon.
You bet. It's going to be very exciting. I know that the Argyle tender this year, like in past years, has been very, very successful. But the biggest difference is that the general public is getting much more involved as the closer we get to the mine actually closing. So the prices of the Argyle tender diamonds are extremely high. In fact, they're going at record prices, even with the ones that are of poor clarity. There's many of the diamonds, 40 to 50% of them, that you can see visible flaws with your eye, but the fact is that these diamonds are still so valuable, and the mine is closing within the next 3 years or 2.5 years, that the prices are just off the charts, the highest that we have ever seen. In fact, in the past 3 years, we haven't actually bid heavily on these because we know where the prices were going. The general public is involved, and the prices are way higher than we've ever seen in the past. So it's a great thing. We do believe that the closer we get to the Argyle mine closing, the prices are going to move substantially. That's what we're banking on. Many of us have invested in Argyle pink diamonds, knowing that the mine is going to close, and over time the prices should go substantially higher.
Speak with Harold about investing in hard assets. If you would like to know more about our featured diamond, go to rarecoloreddiamonds.com, featured diamond of the week. It's a 1.07 carat pear-shaped Fancy Vivid yellow internally flawless. See it online, featured diamond of the week from rarecoloreddiamonds.com. Now, when it comes to green diamonds, we've talked about it before, but on May 31, 2016, the Aurora Green Diamond sold for a record-breaking $16.8 million. It's 5.03 carats, and it set 2 world records. It was at Christie's Hong Kong Magnificent Jewel sale, selling for $16.8 million, but it also went for a record per carat, $3.3 million per carat. The green diamond with VS2 clarity mounted on a gold ring surrounded by circular cut pink diamonds was purchased by Hong Kong-based Chow Tai Fook Jewelry, one of the largest jewelry retailers in the world. Now we have other news that's breaking on green diamonds. A rare 5.62 carat green diamond will go to auction at Phillips, and this is in Hong Kong dollars, for $26 million. So the estimate on it is Hong Kong $22 million to Hong Kong $26 million, and that is in U.S. dollars $2.8 million to $3.3 million. And pigeon blood rubies and pink diamonds might be in high demand, but Phillips' upcoming autumn auction is betting on an evergreen collection of emeralds, jadeite, and rare, fancy, intense green diamond. A total of 140 lots will go under the hammer at Phillips Jewels and Jadeite Auction coming up November 27 at the Mandarin Oriental. Now, the highlight will be this 5.62 carat green diamond, which could go for up to $3.3 million. The significant gemstone is an exceptional geological formation, prized for the rich, uniform, and saturated green body color, as well as its remarkable size, according to Terry Chu, Phillips Asia head of jewelry. The rising demand for green diamonds, Chu adds, has much to do with the increased awareness and the rarity of green diamonds available on the market. Now, Harold, that's something that you've advocated for quite some time, green diamonds. You felt many years ago you were a big advocate of yellow diamonds. We knew obviously we knew that reds and blues and pinks, those would be winners. We knew that you felt there would be a pocket of opportunity in the yellows, and that turned out to be correct. And you really strongly believe in this green market now.
I do, because greens are extremely rare, very, very difficult to find, and when they do show up at auction, which is very, very seldom, the prices are substantial. And we know that earlier in the year, the Aurora green sold this year for $3 million a carat. It was a 5-carat vivid green diamond, sold for $15 million. We believe that greens are the next blues. There's very, very few blues that can come onto the market. But because blue diamonds at auction have done so tremendously well, and the prices were literally astronomical, you're seeing that collectors of blues are so impressed with the prices that they're bringing the odd blue onto the market. Now, very few investors have green diamonds, so they're very, very rare. A diamond turns green because uranium seeps into the ground and turns that diamond green. The thing is that all diamonds are made up of the same thing. They're compressed carbon. So the fact is that why would a white diamond be any different than a green diamond or a blue diamond? They're all the same. They're all made of the same carbon. It's just that a diamond has turned a color because a mineral has seeped into the ground. Now, for blue diamonds, it's boron. For green diamonds, it's uranium. For yellow diamonds and orange diamonds, it's nitrogen. They don't know it turns a diamond red, and they don't know it turns a diamond pink. So the mystery of those diamonds makes them extremely rare. Reds have always been the rarest diamonds. You very, very seldom ever see a red diamond come up for auction. There's very, very few of them ever graded by GIA. The fact is, very few blue diamonds become available. But because blue diamonds have fetched such huge returns, you're seeing more blues come onto the market from collections than almost anything else. But coming up, you will start to see that investors are going to start to really get heavily into the green market because the prices are still reasonable. With blue diamonds, blue vivid diamonds, on important diamonds, you're seeing that the prices have gone from $200,000 a carat back in 2005 up to $4 to $5 million a carat this year. What we're seeing with green diamonds is that the Aurora green, which was a 5-carat vivid, sold for $15 million, $3 million a carat. There's no reason that green vivid diamonds shouldn't reach the same plateau that blue diamonds are hitting at this point because they're equally as rare. So very heavily recommend green diamonds if you could ever find one. They're very, very difficult to get.
Our featured diamond of the week, rarecoloreddiamonds.com. Go to the website. Click on Featured Diamond of the Week. You will see a museum piece. It's a 1.07 carat, pear-shaped, fancy, vivid, yellow, internally flawless. See it online at rarecoloreddiamonds.com. Well, we talked about the largest fancy, intense pink diamond that could fetch $30 million at the Sotheby's Magnificent Jewels and Noble Jewels sale in Geneva, November 15. So, punch, counterpunch. What did the people from Christie's come up with for their sale on November the 14th in Geneva? They are obviously in competition with Sotheby's, and their sale is on the 14th, and they have, you have Sotheby's on the 15th and Christie's on the 14th. Well, the counterpunch is, and this is a stunning diamond. Diamond in the crown, Le Grand Mazarin. On November 14, December 2017 in Geneva, one of France's most storied gems comes to auction at Christie's. Here's the remarkable story of a diamond with 3 centuries of royal provenance. The diamond known as the Grand Mazarin originated in the Golconda mines in India's Deccan Plateau. The Golconda mines are legendary for having produced some of the most important diamonds in the history of the world. Among them, the Koh-i-Noor, the Regent Diamond, and the Wittelsbach Graph, all famous for their exceptional clarity. The stone will be offered on November 14 in the magnificent jewel sale at Christie's in Geneva. It takes its name from Cardinal Mazarin, who became France's chief minister in 1642. Towards the end of his life, he assembled a collection of 18 exceptional gems, purchased from the royal families of Europe or sourced from the jeweler Lescot. They were the most beautiful jewels on the continent. Le Grand Mazarin, a historic colored diamond, the old mine brilliant cut diamond, weighing approximately 19.07 carats, and it has a GIA report from October 4, 2017, from the GIA saying that the diamond is light pink color, VS2 clarity, and the diamond type classification letter stating that the diamond has been determined to be type 2A. And this lot is going to be on offer at the magnificent jewel sale at Christie's in Geneva. But Harold, the Raja Pink on the 15th, and prior to that, on the 14th, you have competing company Christie's coming out with what a Grand Slam diamond, Le Grand Mazarin, and they do not give an estimate as to what they think this could sell for, but one would suspect, with the provenance and the history behind this, this could be a legendary diamond that someone picks up for a very big price.
Wouldn't that be exciting? What a beautiful, beautiful diamond. You know, the thing is that it's so exciting when these diamonds come up for auction. You know, the chances of ever seeing a diamond like this for the general public is next to impossible. They're never going to see it in person unless you went to the Smithsonian or something like that. So it's very exciting for most people to see that these type of gems exist and what they sell for. Fact is, I wish we knew in most cases what they were purchased for, because that would give us a great indication as the profit on the diamond type of thing. But again, when people and investors are spending that type of money, the tens and 20 and 30 and 40 and 50 million dollars, they're buying something that has tremendous value to it. And the fact is that they're buying it because they believe that this is a strong investment for the family trust and that type of thing, because most times when you own a diamond, it stays in the family for a long period of time. So, again, it's just so thrilling, Randy, to see these auctions and to see these diamonds. Now, being in the diamond business as long as I have, I've seen some outrageous diamonds. We own a 100-carat, deep, flawless, perfect diamond that if anybody saw this diamond or held it in their hand would not even believe that something like this exists. We own a 19-carat green diamond. We own some outrageous diamonds, and to see them in person is just an absolute thrill. In fact, many of our Canadian clients come down to Palm Beach to visit us during the winter and have seen these amazing diamonds in our private showroom. So that is certainly available for our clients if they wanted to do that, and to see these outrageous diamonds that, again, in most cases, most people would never, ever get to see.
Featured Diamond of the Week. Go to the website, rarecoloreddiamonds.com. Featured diamond, 1.07 carat, pear-shaped, fancy, vivid, yellow, internally flawless. If you've been sitting on the sidelines waiting to invest in hard assets, speak with Harold Siegel. The question is, how do you invest today so you can retire tomorrow? That's why we do this show. Call Harold. Speak with him personally and privately. The call is free and anything discussed confidential. 1-800-432-1022. The website, rarecoloreddiamonds.com. We love Argyle pink diamonds, and we know that the tender is now up for 2017. We're waiting the results. Well, a jeweler is going to display 100 million of colored diamonds. Australian jeweler Linney's is showcasing 100 million worth of jewelry featuring rare colored diamonds, all from the Argyle mine. Now, the highlight of the collection is a ring containing the Argyle Violet, a 2.83 carat fancy deep grayish bluish violet diamond that Rio Tinto discovered from the iconic mine in Western Australia. The stone, the top diamond from the 2016 Argyle Pink Diamonds tender, is surrounded by 10 round vivid pink diamonds from Argyle, which together weigh 0.83 carats, and 2 heart-shaped Argyle vivid pink diamonds weighing a combined 0.67 carats. The Argyle Violet is extremely rare. Last year, Rio Tinto said the mine had yielded only 12 carats of polished violet diamonds in the 32 years of the annual tender. Now, New York-based LJ West Diamonds bought the stone last year for an undisclosed amount during the Argyle 2016 tender. Linney's collection also includes the Argyle Thea, and that is a 2.24 carat fancy vivid purplish pink diamond from the 2016 tender, now set in a platinum ring, featuring the finest colored diamonds from the Argyle diamond mine and across the globe. This exclusive showcase represents rarity never seen before, according to David Fardon, who is the director of Linney's. This is the first time in Australia we will have a jewelry collection valued in excess of 100 million, all from the Argyle diamond mine in Australia. And Harold, it's Western Australia, and we know that that mine is shutting down here at the end of 2020, 2021, somewhere in there. We have about 2 minutes left in our segment.
You bet, Randy. It'll be the end of an unbelievable mine that was discovered in 1986. Largest producing diamond mine in the world, producing over 30 million carats of diamonds a year. Most of those low-grade industrial white diamonds, but out of this unbelievable mine comes 95% of the world's supply of pink diamonds. Very tiny amount. These are extremely rare. Nobody knows why diamonds turn pink or red, but they come out of this amazing mine, and this mine is going to close right around 2020, which is about 2 years from now. So we highly recommend the purchase of Argyle pink diamonds. We believe it'll be a very strong investment moving forward, and again, a perfect investment to buy for your kids and grandkids, so when they do get older and going to make their mark in the world, they have something of value.
See the Argyle pink diamonds that Harold has in Rare Colored Diamonds Vault. Go to rarecoloreddiamonds.com and you can click on pink diamonds. All the Argyle pink diamonds are there, and Harold will be more than happy to help you connect with the diamond that would be perfect for you. Our featured diamond of the week is a 1.07 carat pear-shaped fancy vivid yellow internally flawless. See this diamond online at rarecoloreddiamonds.com, and I encourage you to get our free weekly newsletter from Harold. We have outstanding stories, the New York Times, rare necklaces and rings or items to appreciate. Just ask an investor. Also, we have the story on the Raja Pink. We have the story on the Green Diamond, the Argyle Diamonds, 100 million of them, the Le Grand Mezzarine Diamond, and we also have another story on a Bonham sale where they're selling colored diamonds at auction. But if you've been hesitating or waiting, do not wait any longer. Speak with Harold personally, privately. RareColoredDiamonds.com, 1-800-432-1022, because at some point the Argyle mine will close and the opportunity will be done at that point. It will be a secondary market. And Harold, any closing thoughts here in the last 30 seconds?
Just, again, the markets are all volatile. There's a lot of things happening that can be very dangerous. 23,000 Dow with a bad economy like the U.S. has at this time is not a very smart investment, especially with prices this high. So be very careful, don't speculate, don't leverage, and think twice before you go into a risky investment like U.S. stocks or Canadian real estate.
Thank you very much, Harold, for your knowledge and another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.